Alright traders, we're heading into a very volatile week with Trump's tariffs on Canada, Mexico and China now officially confirmed to start on February the 4th, and most traders are anticipating an immediate risk-off reaction in the markets at the open on Monday, which means expecting a bit of upside gaps in the likes of the dollar, as well as safe haven currencies like the yen and the Swiss franc. Also expecting downside gaps in equity futures like the US 500, NASDAQ 100, and downside, of course, in those relevant currencies like the CAD, the Mexican peso, the yuan, as well as some downside in those high beta currencies, the Aussie and the Kiwi. The big question for traders on Monday will be whether they should chase these potential initial moves or fade them. Now, this is tricky because when you look at a pair like the dollar CAD, for example, it's already rallied close to 5% since we first heard of possible tariffs against Canada. And then also looking at the amount of fear that's already been priced in, with implied volatility trading at its highest level since 2017. And with positioning data already showing the biggest net short in the CAD since about 7 years ago. So when we put all of these things together, it's very hard to get excited about trying to chase the dollar CAD higher after any potential gap we see at the open on Monday. Now, don't get me wrong, 75% of Canada's exports get sent to the US alone. So with 25% tariffs from the US, Canada's own retaliation, and of course threats that Trump could even double those tariffs because of the retaliation, there is or could be some recession fears being priced into the markets. But at the end of the day, it comes down to risk to reward, right? So with all of this fear already priced in at this stage, the more attractive trade, in my opinion, as mentioned in the video on Friday, is just to wait for any possible good news that we get on the tariff side to play out. So how are traders looking to play the week ahead then? Firstly, with patience, waiting to see what type of reactions we get on Monday, and then watching to see how aggressive markets potentially try to fade any of those initial moves. That'll give us an idea of where they see the balance of risk. So for example, if we see just a small gap to the upside in the dollar CAD, with potentially the pair staying below that key level of multi-year resistance at 146.60, that'll show a very small reaction to the bad news, and that could set up a potential fade opportunity. If we see a massive gap to the upside, like a 2 or a 3% gap, like some are expecting, but markets start to, aggressively close that gap, that could also see a couple of gap sellers stepping in, and that could be exciting to look at as well. However, the very best play in my view would just be to wait for some potential agreement. We did hear Trump tease a possible reprieve for Canada and Mexico if they can make some concessions on migration as well as security. And if we get that type of reprieve, it could see a very sharp reversal to the downside in the dollar CAD and potential upside for US equities as well. In my opinion, that poses the most attractive risk reward from a fundamental point of view and a macro view to try and play this. We also need to keep an eye out for any potential tariffs against the EU, the UK, and obviously global tariffs as well. Now, as a word of caution, just look at this massive amount of chop we've seen in the dollar CAD over the past 2 weeks. So we are bound, in my opinion, or in store for more choppy price action. So as always, stay nimble and trade safe.